The Corporation is a 2003 Canadian documentary film written by University of British Columbia law professor Joel Bacan and directed by Mark Akbar and Jennifer Abbott. The documentary examines the modern-day corporation. Bacan wrote the book The Corporation: The Pathological Pursuit of Profit and Power during the filming of the documentary. A sequel film, The New Corporation: The Unfortunately Necessary Sequel, was released in 2020. The filmmakers posed the question, if a corporation is like a human being, how would a psychiatrist choose to characterize that person? Well, since corporations are ruled by the profit motive, they're almost by definition greedy, selfish, ruthless, and ultimately indifferent to the well-being of others. The conclusion the film came to is that the corporation, if you really look at it, has the profile of a psychopath. In specific places, the West, the Philippines, is this the case? If you were to become the leader of one of the biggest corporations in the country, how will you run it? Will you be greedy, selfish, ruthless, and indifferent to people's well being, as the film producers make them out to be? A corporation can be an incorporator. In fact, Section 41 of the Revised Corporation Code gives power to the board and shareholders to invest corporate funds in another corporation. With a majority vote of the board and two-thirds vote of outstanding common shares, a private corporate can invest its funds in any other corporation, business, or for any purpose other than the primary purpose for which it was organized. Example: Ayala Corporation, the holding company of the Ayala Group, has invested in Ayala Land and Manila Waterworks. See page 196 of Ayala Corporation's Section 17A and BPI and Globe. Is the approval by majority of the board and two-thirds of shareholders always required when investing corporate funds in another corporation? No. Where the investment by the corporation is reasonably necessary to accomplish its primary purpose, as stated in the Articles of Incorporation, the approval of the stockholders or members shall not be necessary. What are the contents of the Articles of Incorporation? Two of them are the name of the corporation and specific purpose or purposes. Other than that, there are a few more. The contents of the bylaws, on the other hand, are, for example, the time, place, and manner of calling and conducting meetings of directors or trustees, and so on and so forth. As opposed to the West, especially the US, where shareholdings are diffuse, meaning spread out among many shareholders, there has been a split between the agents, the managers, the executives, what they do, how they decide, and principals, meaning the stockholders, their interests, what they would want done. Thus, corporate governance there is more a matter of resolving such principal-agent problem. In the Philippines, on the other hand, shareholdings are in the hands of the controlling family. Just think, Ayala, the Cs of SM, Gokongwei, Lopez, Lucio Tan, Pangilinan, Ang of SMC, etc. It has been difficult for ordinary small stockholders to get hold of a greater share in the shareholdings of the firm, thus leading to what we call expropriation of the minority owners by the majority shareholders. We will discuss this in detail in a later session on ownership structure, control rights, and minority stockholders. Let's go back to the corporation. Section 22 of the Revised Corporation Code indicates the powers of the directors or trustees. That is, to conduct all business and control all properties of the corporation. In Section 23, what is required at all elections of directors or trustees? The presence of majority of owners, whether in person or through a written proxy. What is another mode of election allowed? Voting through remote communication. When is voting by remote communication allowed? Authorized by bylaws or by a majority of the board of directors. For corporations vested with public interest, voting by remote communication is allowed even with the provision in the bylaws. Each stockholder or member shall have the right to nominate any director or trustee who possesses all the qualifications and none of the disqualifications set forth in the code. Election is either in person or through written proxy or remote communication or in absentia. After the Articles of Incorporation are approved by the SEC, an election of directors must be done. After the election of directors, the following corporate officers should be elected. First, the president, who must be a director. Second, treasurer, who must be a resident. Third, corporate secretary, who must be a citizen and resident of the Philippines. Fourth, other officers as provided in the bylaws. What two corporate positions cannot be held simultaneously by one person? President and treasurer, and also president and corporate secretary. The compensation of directors is generally fixed in the bylaws. Is there a cap on the total yearly compensation of directors? Yes. Total yearly compensation of directors cannot exceed 10% of the net income before income tax of the corporation during the preceding year. Can directors or trustees participate in the setting of their own per diems or compensation? No, as this would be a conflict of interest. Publicly listed companies, or PLCs, are required to submit to their shareholders and the SEC an annual report of the total compensation of each of their directors or trustees. If you were to look at the SEC 17A filings of some of our PLCs, you'd find that some of them are not compliant with this ruling. Pictured on screen is Aboitiz Power's Board of Directors Compensation Scheme. What instances create liability to directors, trustees, officers? Damages sustained by the corporation due to A. Willful adoption of unlawful acts. B. Gross negligence or bad faith in directing the affairs of the corporation. C. Acquisition of personal or pecuniary interest in conflict with their duty. What then is the relevance of corporate governance? In principle, the protection of shareholders or investors, and ultimately, stakeholders. Corporate governance is very relevant to the corporate setup. Why? Because in a corporate setup, there is a separation between ownership, that is by the shareholders, and managerial control, CEO and management, meaning other executives. As we can see in a typical organizational chart, shareholders elect members to the board who in turn hire or appoint managers or executives. There are two types of corporation, for-profit and not-for-profit or government entities. How the board members are elected or chosen is different between profit and not-for-profit entities. For-profit entities, board members are elected, while trustees of not-for-profits are usually appointed. Corporations may be stock or non-stock corporations. Stockholders are for stock corporations, while members are for non-stock corporations. Board of Directors is for stock corporation, while Board of Trustees is for non-stock corporation. The Philippines follows the one-tier board system, similar to the USA and UK. The two-tier board originated from Germany. Under the two-tier board structure, the Board of Directors makes up the management or executive board, while the Board of Commissioners serves as the supervisory board. Shareholders appoint the members of the supervisory board, then members of the supervisory board appoint members of the management board. Key differences between one-tier and two-tier board structure. 1. Size of the board is larger for two-tiered board, and 2. Roles and representation. With the unitary boards, directors are appointed based on friendship, while dual boards typically appoint members based on expertise. The dual board relies on the effectiveness of a small group to execute a strategy that is informed and guided by a larger group of experts. In terms of employee representation, The German type two-tier board has 50% employee representation, while in the opposite side of the spectrum is the Dutch system where employees are restricted to make recommendations for the appointment of particular candidates. Employee representatives must not be employees of the company. In Asia, all countries adopt the unitary board structure except for Indonesia, according to an ADB study, and also China, Japan, and Vietnam, with Korea and Taiwan adopting both single and quasi-dual board structure. From a survey conducted by OECD, it seems that Taiwan is gradually moving to unitary board. Korea is reported to adopt the unitary board structure as of this moment. Earlier, mention was made of the Articles of Incorporation, Section 13, spelling out the specific purpose or purposes of the corporation. Will you find any Articles of Incorporation that would say maximize profits or maximize shareholder wealth? Please take note of this question and please pause for some reflection. Under Milton Friedman's doctrine that profit is the only social purpose of business, corporations have been a source of great economic prosperity and growth, but also great inequality and environmental degradation. As companies have become increasingly focused on profits and detached from a broader public purpose, Colin Mayer says they have engendered in society a profound, pervasive, and persistent distrust of business leaders and corporations. In his work on the future of the corporation and in his recent book, Prosperity Better Business Makes the Greater Good, Colin Mayer seeks to determine how business needs to change over the coming decades in order to address this distrust, ameliorate inequality and environmental impacts, and grapple with the many other social, political, and economic challenges we face today. Mayer proposes an alternative, alliterative, and to some radical theory of the purpose of business, rather than producing profits for their own sake. He says the purpose of business is to produce profitable solutions to the problems of people and planet, and in the process it produces profits. While this counter-narrative is certainly a significant departure from the Friedman doctrine, Mayer argues that it is hardly a novel concept. He points out that corporations were originally established under Roman law to undertake public functions such as collecting taxes, minting coins, and building infrastructures. It is only over the last 60 years that the Friedman doctrine and shareholder primacy have taken hold, and public purposes have become detached from the corporation. To continue, breaking with the dominant finance paradigm, shareholder wealth maximization, utilitarianism, and challenging the powerful guardians of that paradigm will take a high level of courage, courage being one of the four cardinal virtues. The authors of that mentioned journal article use the term samurai finance to denote the challenge faced by the pioneers who must be bold, wholehearted, and unyielding in pursuit of a higher goal, the accomplishing of which will be fraught with difficulties and may oftentimes even seem to be an impossibility. Would it be possible then for us finance professionals and professors to agree that the goal of all organizations, business and non-business, for profit and not for profit, should be to contribute to society in some manner or other? Different organizations have the ability to contribute to society in different ways, but each should exist to provide some benefit to society. Breaking with the dominant finance paradigm, shareholder wealth maximization, utilitarianism, and challenging the powerful guardians of that paradigm will take a high level of courage. The authors of the mentioned journal article use the term samurai finance to denote the challenge faced by the pioneers who must be bold, wholehearted, and unyielding in pursuit of a higher goal, the accomplishing of which will be fraught with difficulties and may oftentimes even seem to be an impossibility. Would it be possible for us finance professionals and professors to agree that the goal of all organizations, business and non-business, for profit and not for profit, should be to contribute to society in some manner or other? Different organizations have the ability to contribute to society in different ways, but each should exist to provide some benefit to society. Now we discuss non-executive directors, NEDs, as opposed to independent directors. According to the website of the Institute of Directors in New Zealand, NEDs may be representing a major shareholder, but an independent director will generally have no other links with the company other than sitting on the board. What are the roles of non-executive directors? Recommendation 1.2 of our Code of Corporate Governance says protection of company's interest over the interest of the individual shareholders. Recommendation 5.7 says NEDs are expected to scrutinize management's performance in meeting company's goals and objectives, satisfy themselves on the integrity of the company's internal control and effectiveness of the risk management systems. For NEDs to do their roles properly, Recommendation 4.2 states that NEDs should concurrently serve as directors to a maximum of 5 publicly listed companies to ensure that they have sufficient time to fully prepare for meetings, challenge management's proposals and views, and oversee the long-term strategy of the company. The 2002 code did not say such specification. Importance of NEDs and independent directors. The board of directors, as an integral element of a firm's corporate governance system, performs the dual role of monitoring and advising top management. However, the monitoring duty mostly falls to independent directors. In fact, a study finds that having relevant industry expertise enhances independent directors' ability to perform their monitoring function better. Board monitoring, especially by audit committees, is critically important in constraining managers' opportunistic accounting behavior. Because independent boards and audit committees influence reliability of financial reports, Huang et al. Find that firms with greater proportion of independent directors have bank loans with lower costs, longer maturity, and fewer covenants. This is because firms with a greater proportion of devoted independent directors have better governance quality that leads to better firm performance and a lower likelihood of violating loan covenants. The Philippines, since 2016 Code of Corporate Governance, required at least 3 of the directors or at least one-third of the board members, whichever is higher, to be independent directors. Section 22 states that corporations vested with public interest shall have independent directors constituting at least 20% of such board. What corporations are considered vested with public interest? Corporations whose securities are registered with the SEC, corporations listed with an exchange, or with assets of at least 50 million pesos and having 200 or more holders of shares, each holding at least 100 shares of a class of its equity. Banks and quasi-banks, NSSLAs, pawnshops, corporations engaged in money service business, pre-need, trust and insurance companies, and other financial intermediaries. And the other category is other corporations engaged in business vested with public interest. In the West, too big to fail or TBTF is a term used in banking and finance to describe businesses that have a significant economic impact on the global economy and whose failure could result in worldwide financial crises. Because of their crucial role in keeping the financial system balanced, governments step into saving such interconnected institutions in the event of a market or sector collapse. Are the vested with public interest corporations in the Philippines similar to the so-called too big to fail institutions? That can be a subject matter for your investigation and reflection later. Thank you very much. We can now proceed to Q&A.